Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 29th of January. It is a Tuesday. It was a fairly uneventful day in the market once again from a broad perspective here as we're kind of looking into Apple's earnings, tomorrow's Fed meeting, maybe some of those type of things. So another flat day, trying to get my chat up here so I can see you guys, and we are moving and shaking. Hope everybody had a great day trading. A little on the dull side, but you know, it just depends on how you look at it. Lots of big movers like we've seen all week long. Last week and a half, big movers on an individual level, very flat on a broad level as we continue to digest these earnings. I was hoping Apple was going to come in before we kicked off the recap, but alas, that was not meant to be. So we will have to check that, in a little bit. And I'm sure the coach will talk a little Apple in the coaches show this afternoon as well. So be sure to tune in over there. Hello, Andy, Adam, Marie, Abel, Patricia. As always, guys, it is great to see you. I hope you had a fantastic day, both in and out of the market. Taking a look ahead, while Apple is definitely, probably rightfully so, going to get the headlines, they certainly are not the only S&P company reporting here tonight or tomorrow morning. Here we have the list for this evening. Apple, obviously the big one, but Amgen, Illumina, a couple big name, medical equipment companies, eBay, AMD, some stocks that we've been known to keep an eye on coming out here tonight. And then, of course, tomorrow before the open, we've got an AT&T, a Boeing, a McDonald's, Thermo Fisher. So we are, Apple's going to get the headlines, and to a large extent, justifiably so. But these guys will be moving and shaking as well. Is that where they are? And hello, Angie, about 2%. They were just starting to wiggle as I was getting ready to kick off the market recap. So that's where they were about when I left them. I hadn't seen any results just yet, Adam. Thanks for the heads up over there. So earnings season, right? And as many stocks are moving. We certainly saw. PCAR was my favorite one this morning, gapping into resistance on a good report. We'll take a look at them here in a moment. But definitely some movers and shakers. When we look at our broad market, though, here we are on a 15-minute chart, and it's basically deja vu all over again, right? Some back and forth, but not really going anywhere, at least for today. Looking at the daily chart, we still find ourselves in the exact same trading range we found ourselves in for several days now. Not a bad thing. Maybe it's the Apple's earnings that's a catalyst. Maybe it's Fed speak tomorrow. Maybe it's the jobs report on Friday. We will see, but we are still range bound from a broad perspective in the overall market as we're just digesting news, right? Nobody quite knows what to make of it just yet, and that's an okay thing. Numbers really remain pretty much unchanged over on the S&P. No doubt 26 or approximately thereabouts, acting kind of as our primary support level in the S&P 500. Really same story over in the NASDAQ. We did see a little more selling in the NASDAQ today than we did in our other indexes, down not quite 1% on the day, but still smack dab in that trading range. Definitely, again, nothing to see here from a charting perspective that we haven't seen for the last several trading days. And of course, a recurring theme is the Dow Jones doing the exact same thing. Now, we were able to close up on the day over in the Dow, 0.21%. So not a huge day by any means, but a green day is a green day. So it's still range bound over here, holding up above support in our moving averages. Looks like Marie found our Apple earnings for us. So it looks like just a little tiny miss on the EPS and miss on the guidance too, huh? That should make for an interesting open tomorrow morning. So both in Apple and the broad market, very interesting. Looking forward to going in and taking a closer look at that report for sure. No doubt. Thank you for sharing, Marie. We all probably were wondering, right? So really over in the Dow, again, we are really getting into a very nice little range, which is, in my opinion, awesome to see. Whether we end up breaking support, generating sell signals, breaking resistance, generating more buy signals, I honestly don't really have a strong preference either way. But I do feel more and more comfortable the longer we are in this trading range that we've developed over the last week or so of trading. I am becoming more and more comfortable in liking those signals early when whichever one happens to happens. So we will see where we go. Over on the Russell, push down a little bit off of that resistance. As we've kind of talked about before, we've got some space here, and really we're kind of at that last level, right? That last level of resistance over in the Russell. I know this line is not going to be perfect, but it looks like where we've kind of started to top out is about at those old floors. If we can push through this, I do expect upward movement, and I do personally like the room that we have to work. Now, we're still fighting at resistance, push down a bit off of that here today, regardless of whether or not you like the breakout or prefer to break down or nothing. I don't know where you sit on things, but much like the rest of the overall market, we are definitely in that rangy situation still in the Russell. But really clean signal if we can break that resistance level, in my personal opinion at least. We'll have to see if that can happen, of course. It's just not easy to break resistance. Sometimes we want it to break support or resistance, so we kind of get in our head that it's not going to be that big of a deal. Sometimes it isn't. Just go ask the real estate ETF. They took out that 3350 pretty easily today. Sometimes it is, right? But it's always a good idea to respect those resistance levels. As we kind of shift gears into our sectors, materials definitely one of the stronger areas on the day, showing nice upward movement off of that little bounce that we established late last week in the form of that doji, working our way back up into this high. As I've said before, this is, once we take this out, if that is what in fact we end up doing, I will look at that as yet another buy signal. Still not seeing any sell signals generated. At least I am not over in the materials sector right now. Hanging out right at resistance. Seemed like maybe it wanted to give it a go, but we were just too range bound today, it looks like, in the overall market for anybody to take that first step, buying at resistance to push us through. But definitely nice upward movement. I do think now we can confidently say that this doji that we put in last week down here at $52 can be called support. We've been calling it support, but one candle, it's hard to trust it, so to speak, as support. But now we've seen significant price appreciation for 3 candles off of that low there on that doji candle. So for me, as long as we're above 52, I will be looking at this sector through bullish eyes as a whole. It's going to have to break that for me to flip around. Even if we see a little bit of selling going into the next couple of days, as long as we hold 52, I'm going to respect this as a pivot, as a swing level of support going into the rest of the week, probably into early next week, unless it gets real crazy between now and then. So over in energy, one of those nothing to see here type of days. Wherever you found yourself yesterday, bullish, bearish, or like me, kind of on the fence, neutral, letting it kind of shake out a little bit. I don't think anything that you saw in the development of the chart here today in energy has really changed from where your opinion has been, at least over the last couple of trading days. We continue to, talk about it because we always want to make sure we're thinking about these things. We've got this old support, this old floor at around $65. I do view that as a significant level of resistance. I know not everybody does, and that probably will dictate in large part how you're viewing the energy sector, at least in the short term. That is an area that scares the heck out of me from a bullish point of view. We are seeing those buy signals, of course, but until that is dealt with or we break down and start generating sell signals, I anticipate I will be very dull when it comes to talking about energy stocks, unfortunately. Keep an eye on that 65 if we approach it. We obviously, wherever you find yourself, we do have a lot of history there in particular as some support. Over in the financials, continuing to consolidate around that 26 mark, push down a little bit here today. Nothing substantial, not enough to really take out anything, even on an intraday level, but definitely bumping its head into that 26. And that is okay. You know, it's always nice, especially if you're more bullish on this sector, like I have been on the financial sectors as of late. If it just pushes right through resistance, it's fine to ask. It's not fine to expect, right? The longer we hold a resistance, you know, we are seeing that buyers are not letting these things dip down too terribly low before moving back in. 26, we were looking at it last week. As the week has developed, I think we can certainly say that it is definitely an area that we are not alone. Everybody, or not maybe everybody, but lots of traders are keen on that 26 mark. A break of that would certainly be another little buy signal. I don't see any sell signals, at least from a broad perspective in the financials, but a very dull day over there. Much like materials, we did see nice movement in the industrials on the back of some earnings here today. Kind of a mixed bag, but the market looks like the market kind of interpreted them as a whole as a positive, running right back to that swing that we put in last week. An old low. This is an area that we've been keeping an eye on. We know that we've seen a nice double bottom here. We saw some downward movement. We ran right up into it here today. This is an area that can be very interesting, in my opinion, going into the latter part of the week, especially if we see that level of resistance broken. Much like, you know, I usually do, I like things with space. And to me, this is the last technical challenge until that 200 period moving average, which, while only, you know, $2.50 on the ETF, does represent some potential move on an individual stock basis. We're not there yet. A break is not a break until it's broke, right? I will prepare for a break as early as tomorrow, because we are certainly knocking on that door, but we have not seen that just yet, at least for today. But a very strong day, up well over 1% over in the industrials. Our top performer here on the day in the industrial sector. Tech kind of going the other way. We saw the NASDAQ was kind of the laggard index here today, and to nobody's surprise, tech was going to be one of our weaker areas on an ETF level as well. Working back, closing very, bearish just on one candle, right? But again, kind of reaffirms for me at least that this is an area I want to see a break, as opposed to an area I'm interested in a pullback. We saw a pretty bearish candle. I think it's safe to call that a bearish engulfing candle. We gobbled up yesterday's candle, closing right on top of the 50 period moving average and this old trend line. Certainly not, in my mind, a tradable a bearish signal, but something I'm going to note. I do think, for me at least, the break now becomes the signal. I don't think I'll be interested in a pullback, and hey, new things may develop between now and whenever that might happen. But right now, with that activity, that to me is an awful bearish candle, closing at the lows, bearish engulfing. Not really done enough to say, I should go bearish, but definitely enough to say I need to be cautious on the bullish side. I know that not everyone's going to agree with me, and I never expect anybody to agree with me blindly by any means, but that's kind of how I'm looking at tech right now. It's kind of gone into the communication services where it's got to break that resistance. I can like it a lot if that does happen. There is a lot of room to the upside, in my opinion, if that is the way that we go. But relative weakness here today, I'm not liking it from a bullish perspective, at least in the very short term, personally. Over in staples, the market, at least today, the market kind of thought about staples like I think about staples, not sure what to make of them. So nice, boring little doji here today. Very hard to see. We'll move our line there. And good afternoon, Zach. Great to see you. Little doji, we saw a little bit of upward movement. Maybe some folks were looking at this as a bullish retracement opportunity, and I do understand that perspective. We saw a little bit of movement to the upside, taking out yesterday's high, and that is a trigger that some folks are going to use from an entry perspective. Right now, that upward movement gives me a little bit more faith in today or yesterday's low as a support zone. Would like to see a little more upward movement before I call that anything other than an intraday level of support. Still don't like it. Still lots of overhead. Still lots of areas that I like better personally, that have more room to move to the upside. And so for me, just like I have felt over the last week or so, I understand how, that some folks might like this, and I don't think it's generating bearish signals, but to me, it does not seem like, at least across the board, the signals are, and the room that the individual stocks have to run are as impressive. as maybe they are in some of these other areas. So, of course, you are free to disagree, but I'll have to see a little more movement. If we see some upward movement, maybe we can call that a retracement entry point. I still probably won't be all that interested in it, but we did see a little bit of movement, although we closed very flat on the day. Utilities, very similar. After breaking out and failing that breakout, we now find ourselves dealing with that old resistance zone all over again. Those of you who are hanging around, back in the fall, we encountered this time and time again, right? In the fall, as we were trying to break to the upside. Definitely having a little bit of a hard time establishing any momentum. Now, in my opinion, part of it is some folks are like me and scared, whether it's of that 50, that trend line, looking, elsewhere if they're going into risk assets, looking into other areas as opposed to utilities, whatever the reasons might be. Clearly falling back below that. I do think from a bullish perspective, at the bare minimum, you have to get back above there, in my opinion, at least, if we aren't going to pull back a little bit further. I'll continue to be a little from a swing trading perspective, at least leery of the utility sector until it shakes out. That 50 comboed with that trend line, as you guys know, I don't have to tell you, but those things scare me. And so if we break back to the upside, I will interpret that as a bullish signal, but I'm not going to like it. Realistically, you probably, you're either playing a pullback. And again, I could understand as long as we, get some signals, haven't got them yet. But to me, there's just more appealing areas, I guess, is the best way to put it. Healthcare mixed earnings, the big earnings coming up, the next couple of days. So we're seeing a little back and forth over in the healthcare sector. Not a bad thing. Ideally, that is what we would see, in my opinion, for the next couple of days while we get through some of these big earnings over in this sector. Not a lot to see here. Interesting to note, I guess we're kind of using that 20 MA as a little bit of an intraday support level, bounced off of it now for the second day in the row for our intraday lows, below $89 right now. Again, with all these earnings, I think you tread lightly going into the rest of the week over in the healthcare sector. For me right now, if we can hang out here for a few more days and digest these earnings, there may be something nice that develops late this week or maybe early next week. I could see if these earnings go wrong. Well, there's still downward movement. We still have a little room to go until we get to a true level of support. Yeah, we are holding up on that 20 MA right now, and that can and oftentimes does act as a support or resistance catalyst. But if that thing falters, there is a little more room. And with a lot of earnings coming out in this sector, I do think for me, it's tread lightly. Tread lightly, let it develop for a few more days, see how these earnings impact the individual companies, and of course the ETF chart. And if things go our way, maybe we have some interesting trades, late this week or early next. Over in the discretionary, one of those days that tells you nothing, right? Continue to back and forth a little bit, much like the overall market. These guys really kind of are mimicking that behavior where we've gone pretty sideways, a little bit on the choppy side, but really not generating any new signals, at least in my mind, one way or the other. So we still have, some room to the upside, have not done anything. And again, for me, we've established some support here, and this is the primary support zone that I will be looking at. So from a bearish point of view, I would need to see that taken out to be looking at the sector as a whole. From a bearish point of view, I don't really expect that to happen. Of course, you don't know that it will or won't, though, right? That story can change real quick. And so, because I never expect support to give out, and of course, sometimes it does. Looking like we're just kind of establishing a little bit of a consolidation. Again, much like a lot of the other areas, if we can take out this little consolidation zone, probably another signal to the bullish side. Still have to see it happen. Hasn't happened yet by any means. Probably the most interesting chart to me, at least today in the overall sector build, is the real estate stock. We rammed right into that 3350 zone. We really kind of fought with it, pushed down a little bit early here today before clearly breaking out of it, showing just more and more and more momentum over in the real estate sector. We are approaching some highs on the ETF level, but we are seeing some individual components making new highs, new 52-week highs. So we continue to show a lot of strength. I think it's probably fair to say that we're a bit extended to the upside right now. Pull back in the not too distant future would seem in order. This has been one heck of a recovery in real estate. They did it in steps, but really it's not really pulled back for a month now, right? Consolidated a time or two, but just tremendous momentum right now in the real estate sector, no doubt about it. Stocks are, running into resistance. Some of them have already broken through. We are dealing with some high points here on the ETF. So this will kind of give you an idea of how much of a run we have had. We are running into that 34, probably that next challenge. You can see a major tipping point back in 2017, major top here last year. 34 should be a challenge. Not a lot between here and there. At least in my mind, not really any reason not to work to 34 from here, taking out 33.50, but that should be a challenge. I'll be keeping a very close eye on that as we approach it, no doubt. Over in communication services, another pretty rough day over there, down, relatively speaking, I guess I should say, down a little over 1%, kind of one of our losers like tech here today. Hasn't done anything, but showing a little more weakness than I would like it to be showing. We're starting to see that short-term 9 turnover, just something, not necessarily the something, but just a little something. We're getting awful close to support. We know that this trend line, whether you think it's broken or not, I think you have to say we're below it again, wherever your trend line might have been. I do think that if we can break this, like I've said before, and it's really kind of warmed up, if we can break that, that could be a nice buy signal. That is a ways away. If we break this support zone, I will personally be calling that a sell signal. Now, we got Facebook coming up this week. We've got Google coming up next week. So we've got some earnings that can push these guys one way or the other in the very, very near future. And maybe that's what it's going to take to get that clarity of breaking above resistance or below support. Keep an eye on that level of support. The simple reality, and you always want to remember the reality, right? We're always putting our opinion, our read on things. Of course, that's our job. But the simple truth is these guys haven't broke trend. They've really had a hard time since their inception. And so that's one reason why I've had them on such a, hey, you guys really have to sell me, because they've done nothing ever in their history for me to give them the benefit of the doubt. Right, at least from a bullish point of view. Giving them the benefit of doubt from a bearish point of view, a little bit different story. I will definitely be keeping a close eye on this support level in going into the rest of the week. But again, Facebook and Google in particular, two huge companies, big components of this ETF yet to report earnings. Google's next week, Facebook's this week. That might have something to do with where we ultimately go. So for the most part, not a lot changed today. We did see some weakness over in tech and communications, a little bit of relative strength in industrials and basic materials. Still a lot of indecision across the board. Real estate, man, it's been a nice run. It seems like a long time ago we were just watching. It was just a week ago when it was just hanging out above that 50, taking a little time. But boy, when it figured itself out, it really got to running. So as we kind of shift over into the VIX, much like the market, we're not doing much, right? Trying to figure this out. Definitely a good thing if you don't like volatility. It does seem like it's simmering down, no doubt about it. Not a whole lot new really developing over in the VIX. We did see a little bit of upward movement over on the dollar here today off of these old shadow support zones. Not, in my opinion, not enough to trade, but a little bit of upward movement. I continue to look at this overall from a neutral perspective. And the only thing that really ever changes is, am I a little bearish or am I a little bullish within this range? Hanging right at support. A break of this should present a little more selling to the downside. I could understand, although I would not do this regardless of what the ticker symbol happened to be. If we see a little more upward movement, that will have put us in a higher low. I could see the argument for moving back into it, but you've got 96, a big round number, a lot of history there sitting right on top of you. I wouldn't like that as an entry personally. I would just look at that as, yeah, now we're swinging from neutral bearish back to neutral bullish. 95, 50, 96 seem to be the short-term numbers on the daily level to be keeping an eye out over on the dollar here today. Gold continues to run, a nice solid break of 13 yesterday, pushing very nicely up to 1310 here today, as clearly it wasn't just us looking at that 1300 as a potential buy zone. A lot of positive momentum developing, a lot of room, right? Really don't have a lot of resistance until we approach that 1350, 1360 range. So certainly everything looks just as good today, maybe even a little bit better, because some more bulls come into it, more traders getting, yeah, I'm sold. Maybe they weren't so sold yesterday. Good solid movement over there in the gold market. Good solid movement over in the silver market too. Did come off of our highs a little bit as we approach. I think we're just going to do this now. That previous high point, that is where we found intraday resistance. And we did see a little bit of selling off of that. Not a major zone by any means. 16 is the big number in my mind. I think a lot of traders would agree with that. And I think at this point in time, at least from a swing perspective, that's probably the better signal than trying to get it a little bit lower, hoping it breaks 16 right now. So just it was the size of this candle when we had pulled back. If this had been a little bit smaller, we may have actually had a very interesting retracement opportunity, but that is not the way it shook out here today. Using this old high as a little bit of intraday resistance, 16, the big number sitting on top of us, no doubt. Over in Natty Gas, we did take out that floor, that low that we had set in. Saw some pretty good selling off of that. Let's just find a look, because it's, if nothing else, it's fun to look at natural gas. Not very practical, at least for me these days. But once we took that out, there was some pretty steep selling, as definitely some short-term bears were coming in, ultimately working our way, turning it around and working back up into this previous trading range, making a little bit of a hammer candlestick. Now, I would not trust, a hammer candlestick as a buy signal on natural gas right now, personally. But it was an interesting day of price action. It continues to be very volatile, very back and forth. In my opinion, a very tricky place from a swing trading perspective. Probably a very appealing place from an intraday perspective. The natural gas traders that I know are, right now at least, are more on that intraday level than the swing level. So I don't have anything insightful to say about the natural gas chart. One of these days, hopefully I do, but until it starts behaving, at least I know that I am not alone. So, and lastly, over in the crude market, a little bit of rally off of yesterday's sell-off, but again, we have done nothing. We are still in this range, not anything to see here. We know the numbers. We've already got our game planned. What do we do if it breaks 55? What do we do if it breaks 50? If anything, in either scenario, those numbers are definitely something that, are sitting right, currently right above us. We're closer to the 55 mark than the 50 mark, but really not a whole lot to see here as it continues to shake itself out. Both of which, again, I'll say it in case you are new here for the first time. Welcome. If you are, if this is the first time you're seeing us over here on the market recap. Above 55, to me, certainly a tradable buy signal. Below 50, certainly a tradable sell signal. Don't know how it'll look. If whichever, sooner or later, one of those breaks will happen. We aren't going to stay in this range forever. But for me, that does need to happen before you can work into it, at least from a directional point of view, as we are very, very sideways. So one of those days, again, we saw some movement. There was some fun stuff going on across the board, but really for the most part, very unchanged overall in the broad market. Here's PCAR, one of my favorite situations, and I know I brought it up to at least some of you guys before, in the earnings season is when a stock gaps into resistance on a strong report or into support on a weak report. We got the bullish side of it. As soon as I caught these guys this morning, I did throw them out on the Tackle Trading Twitter for any of you guys that do follow us over there. But when we gap right into resistance and we're forced to make a decision, we just had a good earnings report, at least a positive reaction to the earnings report. We've gapped into resistance, and one of two things is going to happen. That's all she wrote. Resistance is going to push us down, or we are going to have to fight through that resistance on that momentum, right? And that's that is my favorite thing personally during earnings. So let's go into just a 15-minute chart. We kind of play-by-play these guys. So here's our 15-minute chart. I'm just going to kind of scrunch back into time frame just so we can find it exactly where we want it. So I was hoping we could do a 5-minute chart, but not going to happen. As you can see, there's a resistance zone gapping right into that resistance on the open. Will a 3-minute chart look prettier? All right, well, what the heck? We're hanging out on a Tuesday and Apple's got earnings. We got nothing better to do than look at a 1-minute chart. There we go. I was hoping this little shorter time, longer time frame was going to work, but whatever. So here's our gap on the open. Boom, right into that resistance level. That's a big old W pattern that we were seeing on the daily time frame, right? Immediately reaction, let's not, right? But then we see that upward movement taking out that resistance level. Let's come back into a easier to see time frame now on a 15-minute chart. Once that momentum got established, we really saw, a lot of buying, because again, who would be selling on just a technical chart of something that just broke resistance, right? That's technically speaking, that break of resistance is going to be a bullish signal, regardless of why, right? Why it's breaking that resistance level when we know that it was on a positive response to an earnings report. Well, if we were going to sell it, we don't know the future by any means, but it seems like selling it at resistance would have been more sensible than selling it once we broke through, right? So that is kind of why I look for this. I know I've talked with some of you guys about this type of a pattern or developing thing. I always am up early looking at the earnings reports to see if I can find it. I hope that makes sense. And I know that's not for everybody. It's more of a short-term directional perspective. No doubt about it. But that's always been one of my favorite things that happens during earnings season. Gap into support or resistance and be forced to make a decision at that major price point. If you fail, no big deal. If you break, very interesting opportunity, at least for a short-term trade. So I thought I would share PCAR with you. I definitely thought they were, from a technical point of view, the most interesting. I know PCAR is not the most interesting, name out there in the world of trading, but I do think that its chart was the most interesting, at least to me here today. So hopefully that makes sense for any of you new traders. I'm sure you veteran traders have seen, similar things happen. I know not everyone's going to like that style, and that is fine. But hopefully that, makes sense to some of you new traders. Give something that you can watch going into the future as well. Always have to find ways to keep yourself entertained during earnings season, as if you need it, right? So ladies and gentlemen, that's going to do us for today. But again, one of those days that we just need a little more time to let this shake out, to get some of this news behind us, get a little bit of direction one way or the other. Today, not a lot of clarity. That is okay. Gives us another day to prepare. How do we want to handle things, whether it's managing existing trades or getting into new trades, if and when we break, whichever way we ultimately end up breaking. So these are good days in the market too. Generally just not as exciting to talk about. So with that, ladies and gentlemen, that'll do the market recap. Be sure to subscribe to the channel and hit that notification bell if you are new around here, so you can always be alerted to any new videos or live streams that we've got going on over here at Tackle Trading. Be sure to follow us over at Tackle Trading on Twitter as well to keep up with some of the things that we're running into each and every market day. If you are a Twitter user and I haven't got you added to our Team Tackle Twitter list, just let me know. You can find me in the clubhouse. You can find me at Frank Martin 23 on Twitter, or you can ask anybody in the recap gang or the halftime crew, and they can point you my way, so I can get you added to that list. It's I'm not a Twitter guy, but I'm really enjoying getting to kind of stay in touch with Team Tackle in that manner. So let me know. Thank you, Scott. As always, guys, it is helpful and appreciated if you do give us a thumbs up, if you enjoy the recap, at least that is, to let us know that we're on the right track, and to let Google know that we're on the right Google and YouTube. It's always Google, right? So let them know we're on the right track as well. So ladies and gentlemen, go see what Apple did on its earnings. Get out of here. Have a great afternoon. Enjoy the coaches show. If you're a pro member over at Tackle Trading, and if you're not, go check it out. Come join us. See what it's all about. We're always happy to have you. I will look forward to seeing each and every one of you tomorrow. So get out of here, guys. Happy trading, and I will see you tomorrow. Bye, everyone.